Okay. We got 15 people poking in. Hey guys, if you're on the webinar and you can hear me, go ahead and perk up in the chat on the side panel over there. I think it's the second icon from the top. Click on that, and then at the bottom, type in your message, say hello and where you're from, and we'll get started here. Looks like we'll have a few people coming in. Oh, there's James. Yep. Originally was having a fellow from England on with me, my good friend Saj Galani, but he had to bail out. He bailed on me. And of course, it's over there. It's like 1:30 in the morning. Let's see. We got Nolan Stromler from Arizona. Hey, Nolan. Chris from New York City. All right. What's up, James Amazio Fend? Are you there? Can you hear us?
I think so.
From Arizona. Hey, Nolan. Who's that? Who am I hearing audio? Is that you? Is that you, James?
I'm kind of here.
All right, Hank from Oklahoma, Ryden from
second.
DC. Where's that audio feeding back and from? Is that you? Is it coming back through you, Mark?
No, it's not me.
All right, do me a favor, James. Mute your mic at the top and see if that's what is causing it, and then we'll try to see if we can sort it out. So we got folks from all over the place. All right, so guys, we'll get it going here. We got crypto guys on here who can't figure out webinar technology. Can you hear us, James? All right, all right, James is over there. Let me see. All right, so James is there, but his microphone's on. James, can you hear me? Can you can you hear James? Hello.
Hey, James, there's a microphone button on the top. It's the second one on the top.
I think his mic is on. Say something.
Oh, okay, cool.
Yeah, I can hear you now. I can hear you.
I just can't.
All right. So who else we got?
James, there's a microphone button on the top. It's the second one on the top.
Mic is on. Say something.
Yeah,
Dude,
my mic is on. I'm trying to connect.
Yeah.
My audio doesn't bounce off.
I can hear you. Chris, you're excited because we avoided a government shutdown. Man, I don't know. I think, Chris, I would like to see the government shut down, man. Wouldn't you? I don't want any more new laws. Nolan says, I don't think he can hear. Can you hear us, James? Dude, you got to get your stuff together, man. So, you guys that's in the room, Nolan and Chris and Hank and Robin.
Cool. There we go. Can you hear me?
Yes, we can. Finally.
Uh-huh.
Okay. All right. We're good to go.
Can you hear me?
Yes. Can you hear me? You can't hear us. We can hear you. Can you hear me?
Hold on.
All right. So, all right. You're going to have to figure it out, James. We can't wait on you, brother. Okay. Looking good, guys. Good swag driving, but we'll listen. Okay, cool. Vitality 11. Where are you from, brother? All right. I'm gonna do this right off the bat. We got 21 people. Not everybody has logged. If anybody has logged in, and what in the heck did I try to share my screen? Okay. If anybody's logged in and you hadn't said hello, say hello and tell us where you're from. It usually takes a couple minutes for people to get on in. Don't know how many people are going to be on here tonight. Your connection is a bit slow, James. Yeah. Are you working on Wi-Fi, dude? You need like a direct broadband. You're in Las Vegas, man. You should be able to have like a super high speed internet connection. Yeah, you are kind of laggy. You definitely probably want to hi from Texas. Hey, John from Texas. We got Texas and New York City. Okay. and I guess everybody can hear me okay. My name is Jake Robinson, and and James Fend, the dude that can't hear us or can't speak or mute or whatever he is, he James is a friend of mine that we both met in the Amazon space, Amazon private label. That was back in 2015. It blew up, kind of like what crypto's doing right now. And everybody wanted to get into private label and sell things, importing them from China, that kind of thing. And James figured it out and made a lot of money doing it. I started learning it, and I wanted to learn more. So I started this group of people from a Facebook group. We just got on here, and like six, seven, eight, nine of us would get together. He's going to try to log back in. And we would just chat about Amazon and how to do it, and et cetera. And then after a couple of different times, hey, Jeff from Costa Rica, visiting Nashville. Hey, man, you're just right down the road from me. We can go get a beer later. And so Jay Moore from Chicago, what's up? Is it Jay Moore or John Moore or John J. Moore? Anyway, so what we did is I started inviting people who knew more than us. And what finally happened was that every week this thing kind of like turned into a thing on its own, like organically. And every week I was interviewing people that were making 6 figures and 7 figures in Amazon world. So I got my front row seat. I got to ask all the questions. And I'm kind of going to do it with crypto this time. I think that I can probably bring in some different guests that are experts that know more than me. Because I'm not going to propose to be an expert. I do know a decent amount about crypto. Back in 2014, I got exposed to Bitcoin, started studying it. I read everything I could get my hands on. I listened to every podcast. I joined a local meetup group. And hey, Cal from Denver. And then, Jay Moore from Bitcoin Business. Okay, gotcha. Hey, John. All right. Yeah, I guess you go by the other name. So anyway, I started attending this Bitcoin meetup group, and these guys were really serious guys. But I could keep up with them as far as knowledge because I was studying it, but I never had bought any of it. And just to kind of give you the short version, after I learned enough about it, I was like, why do I want to buy Bitcoin? I mean, I'd have to pay a fee to get some of it. I'm not a miner, so I can't, mine it and get a bunch of it that way. I had looked at it, but it didn't seem practical. But what I did do is I thought, if I bought some of this stuff, I'd have to pay a fee. And then if I go use it to buy a cup of coffee, I'd have to pay another fee. And hey, Tyler Sawyer. Yeah, he don't have his Lambo pick up there. Anyway, hey, Tyler, we'll bring in the room here in a minute if you want to. Click on that hand at the bottom. It says to the very bottom, it says speak request. I can bring you in the room if you got a mic and a camera, or at least a mic. So long story short, I was like, I don't really see the need for Bitcoin right now. I really can't do much with it. I don't want to just own it and then sell it or use it to buy stuff and pay fees with it. So a buddy of mine was like, well, yeah, but if you want to make money, I can show you how to do that. And I said, how you do that? So, well, you get your Coinbase account, buy you some Bitcoin, and then go to localbitcoins.com and arbitrage. I said, what do you mean? He said, you just put an ad and say, I've got Bitcoin to sell. You paid 1.5%, and people will pay a premium on Bitcoin, localbitcoin.com, because they don't want to go through the know your customer information and that kind of thing. So they'll buy it from you as an individual, and they'll pay a premium like 15% above what you paid for it. I said, okay. So at that time, Bitcoin was going for around 400, 450. I bought 2 Bitcoins, and then I was sitting in front of my computer typing up my ad on local Bitcoin. So I went and checked the price to see, exactly what the price was. And dang, if Bitcoin hadn't crashed to $200 a coin. And I said, well, crap, I can't, sell them for 15% over $400 or whatever I paid for them. I can't do that. So I just sat on them. And in fact, I forgot about them. And that was like 3 years ago. And 2 Bitcoins are doing okay right now. And I got excited again. And now, actually, I'm learning how to trade in Bitcoin, trade cryptocurrencies. So anyway, so James, are you there? Okay, Mark, are you there?
Yeah, I'm there. I'm here. Yeah.
You just got your camera off. Okay. I don't
Yeah.
know what's happening. James trying to sort out his problem. Hey, let's see, Tyler, do you want to come on, man? I'm gonna send you an invite to present if you want to come on. All right, here's what we're gonna do, guys. I don't have an agenda tonight. This is no special. I'm not here to sell anything. There's no cost. There's nothing sold. This is just, hey, we just want to chat about something we're excited about. If you're, I don't know if you're new to crypto or not. What I'm gonna do is I'm gonna put up a poll. And if you guys will take my poll, we'll just kind of take a temperature of how much. Yeah, okay, James. He says he's got audio connection problem. If you get it sorted out, man, we'll be here. I'm gonna throw this poll up. If you guys don't mind taking the poll, we've got about 28 people. It'll give us kind of an idea of which way we might want to go. So I'm gonna start the poll right now. And okay, can you guys see the poll? Let me know if somebody say, yeah, I see the poll. Come on, guys, give me some feedback. Or do I need to publish it? Does anybody see the poll? Mark, do you see the poll up there on the side?
Let me see.
Okay, let me put. All right.
Yeah.
All right. Yeah, I had to hit the publish button. Okay.
Yeah.
Wasn't sure. All right. So if you guys just take a minute and. All right. Thanks, guys. Jenny. Hey, that's a new person. Cliff. All right. So I'm brand new. I want to learn, or I've heard about it, but then I have a firm grip. That's why I'm here. I've studied my. Some people feel like this. Yeah, I've studied the heck out of Bitcoin. The more I know, the worse I confused I am. How the heck does this stuff work? So, all right. So we got like one person down there that's like, I own or trade cryptos or mine them, but want to grow my expertise. There's quite a few people that have clicked that button. Okay. Now be thinking of your questions, guys, because what we'll do is if you'll just enter the questions that you want, I'm going to keep running, give you guys a few more seconds to take this poll. We just had 2 more people join. Hey, Saj, man, what are you doing, brother? I didn't think you could make it. Saj, if you want to log in as an administrator, if you want to come into the room, you got a link, don't you? Did you get your link? Or are you just sneaking in here and got to keep it on the down low? It's like 1:30 in the morning over there. All right, so everybody had a chance to take the poll? Okay, all right, I'm going to end the poll, guys. I think that's had a chance. All right. 25% says they're brand new and want to learn. 10% said they've heard about it, but they don't really have a grip on it. 5% are like, they've studied it and now their head hurts. And then nobody says I'm pretty good, but I'm cool with it. I really understand and can probably help answer some of the questions. We have about 5% that fall in that category, and 55% say I own or trade cryptos or they mine them, which is kind of cool. So, all right, we'll go back to the chat here. Nolan, can you explain the importance of USD Tether if the markets are down? Still don't understand the point of it. Well, USD Tether is a coin that is supposed to like mimic the US dollar. It's supposed to be like it's tied to the dollar, but actually it's not tied. It's not directly tied to the dollar. You cannot trade it in for a real dollar. But there is some scuttlebutt about Tether that's more political than it is, how it functions. Mark, you know anything about the problem with Tether?
Yeah, I have been watching it since its inception a couple months ago, and there has been some conspiracy theories and things like that sort. But if you guys go to the official website of Tether and look at the legal disclaimer, and it basically stated, if you look at it now, after January 1st of 2018, it is technically not redeemable for people of U.S. citizens. So what they're trying to do is they have an audit. I'm a CPA myself. I think it's about 2 months ago, back in November, is they trying to publish an audit of a firm in Hong Kong, trying to say they have the matching assets to the liabilities. And but it turned out it wasn't like a signed audit report. It was just more like an agreed upon procedure kind of a thing. They verified the bank account and they say that's what we saw. So I personally think it can be a problem, but basically as long as there's another party willing to accept it, everything's fine. But if everything goes on, it's not technically redeemable to US dollars. And they actually disclose that on their website.
Well, let me ask you this, Mark. Do you think it's still viable to use as a flight to safety if the markets are, it varies up and down. It tries to stay right at $1, but it's been as high as $1.04, and it's been as low as 91 cents. But it has stayed pretty close right there, that dollar mark. Do you have any concerns about the USD tether from using it as a tool?
Well, personally, I've never used it, but what I can tell you is from the Chinese traders community, and these people do use it, and there is no concern at this point. It was bought up shortly after September. We have the September the 4th. That was a big ban. And after that point, I believe sometime in October, it was bought up when Tether was hacked. And ever after that, it wasn't on the radar. At least the Chinese are still using it.
Well, there's also some rumors that, isn't it Bitfinex that issued Tether? Or how does that work?
The Bitfinex and the parent, I think it's a parent company. So one company that actually owns both of them.
And so isn't the problem that we've been hearing is that Bitfinex, which is an exchange where you can buy and sell cryptos, has printed Tether, kind of like the Federal Reserve. They just create Tether out of thin air, and that there's nothing backing it, so they can just keep flood the market with it, and it could collapse on itself eventually. Is that what the fear is?
Well, from what happens is that they were cut off from traditional banking. So what happens is that I haven't checked on them for about a month, but I think it's since May of 2017. Other like Coinbase or Kraken, they are actually working with a bank. But with Bitfinex, they were cut off from traditional banking. So
were they cut off because they would not comply with certain regulations, or?
I think it was a result of a hack, or it was back in May of 2017. It was back in May of 2017. So there was a conspiracy theory saying that because they're going to pay back the customers for the loss of the hack, and they get cut off from banking. So there was a conspiracy theory at that time was popular in the internet, claiming that Tether is a tool they use to pump up the price in order to gain more exchange fee to pay back their shareholders and customers for their lost fund.
Okay, that's what I was hearing. All right, who on here wants to hear? I mean, first of all, let's back up. Mark, give us an introduction, man. Tell us a little bit about yourself. You said you were a CPA, but maybe how did you get into the crypto world, and what are you doing
now?
I got
actually quite late myself, Jake. When I first heard about it is in 2016. I have a customer. He came to me, and we're doing some taxes for him. And then I saw that he made an investment in Bitcoin at that time. Bitcoin at that time was probably $300. It's in that range. It's sub $500. Sub $500. So that's how I heard about Bitcoin and things like that, but I never actually looked into it until this customer showed me the paperwork that he bought it at Coinbase. So started going to a local meetup group, which is held by a financial advising firm. But they're more like this environment. They don't sell anything. It's more like a friendly conversation back then. So I just been interested in technology and what it can do. So I'm like half and half. It's trying to make some money, but also interested to see how that can change the world that we live in today.
Yeah, that's how I feel about it. I'm not just a trader just to make money. I'm not a Bitcoin bro that just wants to make a buck off of cryptos. But yeah, I want to make money. It's not like I don't like money. I don't hate money. On the other hand, though, the actual technology that got me excited was the disruption factor the ability to circumvent centralized government or centralized organizations like banks, etc. How many on here just want to get kind of up to speed? You need to have like a definition of Bitcoin. Some of you, there was a 25% of you, which would be about excuse me, we about 7 or 8 people that say they're brand new and you want to learn. Do you need to know some basic definitions about what Bitcoin is or that sort of thing? I mean, I don't know how we can. I want to make sure that we address some of those questions, but I don't want to bore the guys. They're like, oh, we already know that. So, anybody have a specific question? Robin, yes. Okay. What is Bitcoin? Mark, do you want to do it? Or you want me to go for it?
You go for it, Jake, first.
Okay. I'm gonna try to make it where you can understand it. Maybe there's 2 Bitcoins. There's a Bitcoin with a big B and a Bitcoin with a little b. The Bitcoin with a little b is the currency that people are spending back and forth. It acts like money. The big B is the technology behind it, which is the blockchain technology and the cryptography. Cryptography basically just is a way for a person to send information to another person and have it, encrypted where no one else can understand what it is. So Bitcoin was designed in order to solve an age-old problem of digital money. There have been several different attempts to come out with something like electronic gold or some way to spend money online. The problem is because it's digital, you can copy it, right? So you could, you can basically print extra, just like you can print copy a song and distribute 1,000 copies of it. You can't do that with money. If you do that with money, it's going to be worthless. So there was a guy, supposedly a person named Satoshi Nakamoto. Nobody knows who this guy is. He's anonymous. It may be a guy, it could be a girl, it could be a group of people. Some people think it's the NSA. They made it, but Satoshi Nakamoto came up with an idea that if we could use lots of different computers, like a network of computers out there, and we could encrypt information, then I could send you something that would be valuable, like a Bitcoin, and the network of computers would look at that transaction and verify that it was valid and only be able to spend it one time, because the technology behind the blockchain would record it in the blockchain, and we'd have hundreds of thousands of computers around the world that would all agree that yes, this amount of Bitcoin came from this address and it went to this address, and no one else can change that. So think of the blockchain as it's a public ledger. It kind of works like your register of deeds office. When you buy a property, buy a home, it has to be recorded in the register of deeds office. And before it can be recorded, you have a title searcher, and they're kind of like what the miners are in Bitcoin, or the nodes or the computers that are part of the network. The title searchers go in to the recorder's office and they look at the chain of ownership of that property. So you're wanting to buy it. I'm wanting to buy it from Mark Zhu. They go in and say, yeah, Mark Zhu does own it. And he bought it from James Fend 3 years ago. And then 3 years before that, James Fend bought it 5 years from Tyler Sawyer. And uh-oh, got a phone call coming in. Sorry. So that chain of command is it's like in the register of deeds office. It's kind of like the chain of command in Bitcoin. Every 10 minutes, somebody they record a block of information, which includes transactions that are happening from one party to the next. And so it's kind of like going in the register of deeds office and recording that so that everybody can see it. It's public knowledge, and you can't change it. So when somebody wants to send Bitcoin, they send their Bitcoin. It's just an address, basically an electronic address, and you decide, okay, Mark has a public address, and it's a big long set of numbers and letters. He sends it to me in an email and says, I'm going to send you $50 worth of Bitcoin. So I go into my wallet where I keep my Bitcoins, which they call it a wallet, but there's lots of different ways you can do it. You can do it from an exchange like Coinbase. And I could say, okay, I want to send some money to Mark. I get the address that Mark gave me. I put it in the destinate where I want to send it to, and then I put how much I want to, and I send it. Now it goes out to the internet and goes to the network of blockchain miners, the nodes that guys. I'm sorry, my phone's ringing. I got to turn it. I need to put it on. Let's put it on. Okay, so once that happens, they verify that transaction as being accurate and authentic, and that I own the Bitcoin. I have a right to send it to him. And every 10 minutes, whatever transactions came through that 10-minute block of time gets recorded in that block of information. And now you've got a brand new block. And then 10 minutes later, there's going to be some new transactions, and you have another block. And so you see that chain that it starts building that block of chains all the way back to the very first block. A couple of things about that is the miners, the people, the individuals that run a computer that's willing to put their computer power on the network and verify those transactions and confirm them, they have to be rewarded some way. So there's two ways they get rewarded. One is they can charge a fee to process your transaction. So if you send somebody $100, they might charge you $2 or $3. It could be 30 cents, and right now it's kind of expensive. It's one of the issues with Bitcoin. And the second way they get rewarded is that Satoshi Nakamoto knew that these guys weren't going to just do it for free, and then you have to get the Bitcoins out there. Where do the Bitcoins come from? Well, they're like gold miners. They're called miners because when you process that block of information in that 10-minute period, you got lots of people trying to process it at the same time, all these different computers around the world. The person who completes that block of information first, they are rewarded with a set number of Bitcoin for that block. And used to, when you first started up, they were the reward was 50 Bitcoins per block. So every 10 minutes, 50 new Bitcoins were printed or came into existence. So it was a way to get the Bitcoin in circulation. And if you were the lucky guy or gal that got it done first, you got 50 Bitcoins. But back then, when they first started doing this, Bitcoins weren't worth anything, literally less than, a cent. There was no imputed value. It was kind of done for the fun of it, I guess. There's cryptography guys that just thought it was a cool thing, and they could see the writing on the wall and what it could turn into. But a lot of those guys, they accumulated lots of Bitcoin and became worth a lot of money now. And so to give you every 4 years that a number of Bitcoins gets cut in half. So 4 years later, the reward drops down to 25 Bitcoins per block. And then right now it's at 12 and a half. And then the next time it goes down, and I don't know, a couple of years from now, it'll drop to 6 1/4. What that does is it gets most of the circulation of Bitcoin out there. And right now, and based on this algorithm that Satoshi came up with, there will never be more than 21 million Bitcoins in existence. So that way you don't have inflation. It's not like the Fed, who could just print trillions of dollars and make your existing dollars worthless because there's new dollars flooding the market. This is a deflationary type currency, which means there's a limited supply, and the more and more people who want it is going to drive up the price. It's going to become more and more worth more and more. Right now, there's about 16 million Bitcoins in circulation, but there's probably about 3 million of those Bitcoins that have been lost, where, believe it or not, people, like one guy threw away a hard drive. It wound up at a dump. And after he threw it away, he heard about the price of Bitcoin had gone up a lot. He got to thinking about it. He goes, wait a minute, that's that computer I used in college when I was mining Bitcoin. He had like 7,500 Bitcoins in that hard drive. So it's laying in a dump somewhere. Think about what that's worth. What's 7,500 times 10,000 or whatever I don't know what Bitcoin is today. Maybe it's back up a little bit, but that was a fortune that went down the drain. So those Bitcoins are off the market. So again, it makes Bitcoin worth more over the long run. So every 10 minutes, those miners are confirming those transactions and validating that they're not a double spend, and there can only be a Bitcoin can only be spent once by you, and then the person that you give it to can only spend it once. And that is a great way to provide security and safety. And by the way, you can't hack Bitcoin. There's no way to hack the Bitcoin blockchain. Well, you'd have to have a computer, the size of a building, and you'd have to have a couple of 100 years to do it. So it's not worthwhile to do it. It'd be better just to mine, and you'd make more money than trying to be a crook and trying to break it. What can be hacked is exchanges and wallets and other third-party accessories that people use to access Bitcoin. That's where the security issues lie, and there are some security issues. And as a new person, you need to study this enough to figure that out, so that you don't wind up getting your Bitcoin hacked or stolen because you did something that's not smart. So anyway, do you want to add anything to that, Mark? Yes, it seems like it works until it doesn't. Oh, okay. You got anything you'd like to add to that, Mark?
I think I'm good.
Okay. Anybody else have any particular question you'd like to ask? I'm looking at your, trying to keep track of the questions coming in. Okay. Okay, you guys are having your own side conversation about Tether over there. Okay, good enough. So how many people in here, if you're brand new and you want to, you're welcome, Robin. Actually, somewhere I've got a link. I just found it recently. Let me see if I can find it real quick on my favorites. It was a article about, you want to learn about Bitcoin, and this guy had come up with like what article to read, what podcast to listen to, what books to read, all this kind of stuff. And he actually estimated the time it would take to read it and listen to it. And basically, if you'll follow his prescription, you'll become an expert. And here's the thing about anything. I believe that you can become an expert in cryptocurrency if you spend about 90 days. Literally, if you focus on it, you turn off your TV and log out of that other stuff and focus, then yeah, you can definitely become an expert in cryptocurrency in about 90 days. Not to say that you're going to make a lot of money in it, but you at least will figure out why you like it, and if you want to be a part of this culture, this community, and you'll find out, how can I participate in it that benefits me. So how do you decide? Okay, so Kyle, you got a question here. Let me see. Look, let's see. How do you decide when you want to enter a coin? I'm sort of lost when it comes to charting, and I see you throw those up there often. So you must be part of our. Are you part of a Slack group, Kyle? So yeah, that's what he's referring to is you can buy and sell different coins, because, like, for example, Robin, you might not know this, but there's lots of different coins besides Bitcoin. Bitcoin was the first. It's the biggest. It's considered the granddaddy. But there are other coins like Ethereum and Dash and Monero and Ripple, and there's coins, you just can't believe how many coins there are. A lot of them are legit, and they have big plans to do something that's going to change the world. And there's certain coins that are good for some types of transactions. Ethereum, for example, when they created Ethereum, they didn't just want to be a copycat of Bitcoin. What they want to do is say, well, Bitcoin is just kind of like a currency. We want to be able to use this blockchain technology because it's immutable, can't be changed, and it's transparent. What if we could insert a language, a coding language, onto the blockchain where you as a developer could write a smart app that once you initiate the smart app, and I have a contract between me and you, that if I say, if you do this, I'll give you that, and we encode it in the form of a smart contract recorded on the blockchain, when those things actually happen, the conditions trigger that smart contract to fire off and release an amount of Bitcoin or Ethereum or some other token to compensate you for doing what you said you were going to do. So that is one of the things that different coins have different functionalities. And one of the ways you're going to look at that, Kyle, there's two ways to really analyze coins. One is through technical analysis, and another is through fundamental value or fundamental analysis of their value proposition. You want to address that some, Mark? You got a big handle on that. Mark, are you there?
Yeah, I'm here. Let me turn the video on.
Okay. I mean, somebody that's starting not from where we are, but starting back further where they're like new to this and trying to figure out how do you choose a coin. You might want to go through some things on how not to choose a coin. What are some mistakes that people make and how they wind up losing their money?
Well, I personally never made this mistake, but one of the things that I read through stuff is I'm part of a Chinese OTC group. Because of the Chinese government bans, people trade their stuff to fiat currency over a over-the-counter exchange. So you get to see all kinds of story of people doing stuff. I think to answer the question, how to choose a coin, we should start by how not to choose a coin. A lot of the time, people make a mistake of the first is to chase. For example, they say you did your research and you believe this particular coin has value and you believe in it. So you put, let's say, 25% of your position size into this coin. And what happens is like a month has gone by and nothing was happening to it. It's going sideways. And then your friend was choosing some other coins, and other coins is going up so high. And then you kind of have some uncertainties, not sure what you're going to do. So you decided to sell off your initial coins, sell all of them, and jump into that coin that is, taking off. A lot of people have done that, and it is proven to be, one of a big problem. Because a lot of times they jump into something, as soon as they jump in, it'll tank. And then as soon as they leave the train for the coin they originally have, that will take off. And it has happened just so much. So I think is that for the emotion or the psychologist, if you believe in something that is have a landed project, not just in the thin air or anything like that, that has some value to it, you need to be committed to your original choice and not to be like changing your positions or ideas a couple times a day. Give it some time to play out. Give it some time to play out. It may not be the one that gave you the most growth, but every coin I think will have its turn as long as it has some project. That we have a word to say coin in Chinese. We call some coins air coin that have no project, have no actually doing anything. Everything is in the air. Versus the coin that actually have landed, the project is actually working or they're even making money. So as long as your coin has actually a project and purpose, so it should have some value to it. So holding on to it and keeping your original decision and keep the emotion under check is very important.
Did you say air coin? Like it's all up in the air. There's nothing there.
Yeah, air coin would be a coin that on their roadmap, everything is still in the future. Nothing is actually being done yet. So a coin that has landed in a Chinese saying is that the project is actually working. They actually have customers. They have their platforms and things like that. That's why a smart contract or platform coins are going to be a lot safer because these coins are all landed.
Yeah. Sometimes it takes quite a while for a new project to come up to speed and actually get some traction and do something. Normally speaking, the way you might want to, let me say, image address. Okay. What you might want to do is one of the best ways I know to analyze coins, a couple different things. One is you got to know the players. And then when you start looking at a team, like who's on the team of a new project, usually the ones that have done things in the past that have already had success can give you lots of confidence that, okay, this is a credible team. If you got a team that doesn't have any cryptographic experience and they've got marketing experience or some other stuff, yeah, they'll put together a team, but it's not anything really there. The other thing is is almost every project publishes a white paper, and then the white paper kind of gives you an idea what problem are you solving? Because one of the problems with crypto right now is there are thousands of coins. There's probably 5, 6, 700 coins that are just nothing. They're just trash. All they've done. Are you leaving? Okay. All they've done is basically they've 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 taken something like Bitcoin and they've copied it because Bitcoin is open source. You can get the code yourself. You can launch a coin if you want to, but why launch number 1,562 if that's the next one on the list? Why launch another coin that's exactly like Bitcoin? Because Bitcoin already exists. And you're not going to get a bunch of people leaving Bitcoin to come over to your coin if it's the same thing. You've got to have some utility, something useful, a use case or something. And most coins, a lot of those coins don't have that. So one of the things that I would do is take a look at a website called ICObench.com. ICO stands for Initial Coin Offering. And initial coin offering is just basically like an initial public offering. It's like when a stock goes public. When it's in its infancy, it's like a penny stock. It's gaining traction. It's got a successful run, and they want to raise more money. They go public. Well, these guys do the same thing, and they call them ICOs. For American people, it's getting tougher and tougher to even participate in ICOs because the U.S. government want the ICOs to be listed with the SEC. They got to know your customer and the requirements to be able to make sure that money laundering is not happening. And a lot of these companies don't want to fool with that. So what they do is they just say, screw that. I'm not, we're not going to offer it to Americans. We're just going to offer it to the rest of the world. And there's plenty of people in the rest of the world that'll buy them. So, but ICObench.com, they list every new coin that's coming out. And generally there's about 100 new crypto coins coming out every month. And out of that 100, there might be 1 or 2 or 3 that's valuable. But if you go to that, you can start reading some of the white papers, and don't buy anything, just read it. Get used to the idea, okay, why do I like ADA Cardano? Cardano is a coin that I like for long-term holding. You may be able to make some money short-term, but I'm looking to buy coins that over a period, like what happened to me. I bought some at a low price, and I just forgot about them, and 3 years later, they were like thousands of % higher. There's going to be others that will do that as well. Here's another thing as far as what you're talking about, Kyle. You were talking about actually trading coins. You're like buying and selling stock. And there's different ways you can do that. You can buy and hold a stock, a long term. Or you can be kind of a position trader where you buy and hold it for several weeks or months. Or you could be a swing trader that wants to get in and get out in just a couple of days or so, maybe a week. Or you can be kind of what James would have told you what he does. He's a day trader. I guess, Mark, you kind of day trade. Would you consider yourself a day trader?
No, no, I don't do day trading. I don't. I
thought you and James were like two peas in a pod.
Oh, James and Tyler does that. I don't. I hold on to my stuff, and I do very few trades.
Okay, you're kind of like me. I have a specific, and you've been introduced to the same guy. I actually have a mentor that I pay to teach me how to trade in this. And John, you're asking, do you buy with cash, credit, or other? Well, here's the thing. You've got to get your fiat dollars. When you hear the term fiat, we're talking about your currency, your real government issued currency like US dollars or the German mark or the Japanese yen. You can't just go walk around and buy crypto with cash like that. You have to go to an exchange. Coinbase is an exchange in the US. Gemini is another exchange where they will let you open an account, and it's kind of like opening an account with, I'm trying to think of like Charles Schwab or A.G. Edwards or some of those companies like that. They're brokers. You open an account with them, they accept your dollars, and then they transfer it into Bitcoin or some of these others, Litecoin, Ethereum, Bitcoin Cash, etc. So you go in and you deposit your money with Coinbase, and then at that point you can take your the German mark is gone. That's right, it is gone. It's the euro. Good call, Hank. You might see it come back though, man. We don't know if the euro is going to hold together. With Brexit and the fact that the Brits never did give up the sterling pound, you might see that whole thing fall apart. They'll go back to their original currency. Anyway, you can at that point you can like put in an order and say, I want to buy Bitcoin with these dollars that I have on deposit with Coinbase, and it's like buying stock on the stock exchange. And then so yeah, stronger than the dollar now. Okay, yeah, well, whatever. I wouldn't say the dollar's strong. I wouldn't say any currency is strong when it's backed by debt. It's actually debt money. But anyway, that's a different thing to argue about, Hank. But yes, that's how you would do it, John. Now you can use a credit card. I think Coinbase will let you connect your credit card, so you can technically shift money off your credit card to Coinbase, that sort of thing. There are some unique ways to buy Bitcoin. There are ATM machines, and you can go to atmradar.com, and I'll put that in the chat box. If you go there, you can it'll bring up a map, and you put your zip code in, and it'll show you all the ATMs that are already in your area. You may find that there's a bunch in your area. Now keep in mind, they're going to charge a premium for Bitcoin, so they may charge you 7 to 15% to buy that Bitcoin, but you also don't have to open up an account with Coinbase, and you don't have to wait 2 or 3 weeks for them to process it. Because when Bitcoin took off and blew the top in November through December, there was a day there where Coinbase had 300,000 applications in one day, and they got backed up and they couldn't handle it. I had a buddy of mine, in fact, he was just in the room with us, and he just left, but it took him 3 weeks to get his account open and verified and funded. And all the while, he was chomping at the bit to buy something. In fact, he'd already done some research and discovered a coin called Ripple that he wanted to buy. That actually, it's kind of ironic, but banks want to use it because Ripple offers the ability for banks to send and receive money back and forth without without paying the high fees that they normally are associated with transferring money internationally. And so back at the time he was looking at it, man, it's 25 cents, and I think this has got really good utility. I want to buy something. By the time he got his account open, it was like $1.25. It went up like 5 times, and he missed out on the big move. So anyway, that's another way to buy this through an ATM. You walk up to the ATM, you put your cash in, and it gives you it sends you a Bitcoin address. You have to have a wallet for it, but that's a way to do it. Another way to do it is go to localbitcoins.com. There are people that live around you that own Bitcoin that might be willing to sell it or own some other cryptocurrency. You meet them in a coffee shop, and the same thing. They create a wallet, or you have a wallet created. You have a public address. It's kind of like your bank account number. You give them the public address, and they sit right there in front of you on their phone. They send you whatever you're giving them, and you hand them cash. And you wait till you see the Bitcoin show up in your account, and you hand them the cash, and you just made a transaction. There have been a few people, though, have been taken to task by authorities because, technically speaking, when you do it that way, you're a money transfer company, and you got to have a license for it. And so they're trying to bust people that are doing that. It's kind of like if I meet you at a coffee shop and I buy your, a laptop computer for you and give you cash. That's kind of like our business, right? I mean, are they going to start tracking us down for buying stuff at a yard sale? And that's kind of the way I look at that. But you do have to be careful about that. If you're buying it, you're probably not going to be, and you're not going to have anything to worry about. It's if you're selling it, where it could, you just have to be careful. But that's 2 ways you can buy Bitcoin without opening an account on an exchange. But once you have money on an exchange, you can buy. Let me see if I can maybe pull it up here if I can. I don't know if I can share my screen. Let me see if I can do this. And if I can do this, I'll actually, okay, here we go. Give me a second. I'm just going to sign in to my Coinbase account. I don't know if is this risky, Mark, if I sign into my Coinbase account and share the.
I've never done that.
Okay, let's see here. I'm going to sign in. Let's see, Coinbase. Here we go. Hey. Okay, let's see what we got here. All right, so I'm going to try to share my screen here, guys. Can't do it that way. Hold on, I know what I got to do here. I got to. Okay, here we go. Let's see. Aha. All right, may take a second. Mark, tell me when you can see that.
I can see it now.
Okay, so that's the login screen to my. Actually, it's my wife's Coinbase account. So if you hold on. Okay, so this is like the splash page to land on. So you can see right now Bitcoin is selling for $11,468. It's dropped $5,500 since last month. That's a loss of 32%. And then you've got the different currencies you can purchase through Bitcoin. You can Coinbase. You can do Bitcoin, Bitcoin Cash, Ethereum, Litecoin, of course, US dollars. And you can see how much I sent there. Anyway, I got a couple of Bitcoins a long time ago, but they're not in here anymore. They're totally gone. And you can buy and sell. So you could go over here and say, I want to, it's tied to my bank account. So I want to transfer money from my bank account into my Coinbase. And once it's in the Coinbase, I can say, I want to buy Bitcoin and make that and go through that process. So anyway, that's kind of what you're looking at. It's just a real simple process to do that kind of stuff. And let's see. I want to show you guys something. By the way, how many people are like concerned that Bitcoin just took a big downward fall? It went from like, what was it, trading around 16,000 mark and went down to like a little bit below 10,000 before it started back up.
Yep.
Okay. Does that bother anybody out there that's in our webinar right now? You guys give me are you okay with it? That, okay, it's going to go up and down. But I saw this video on, yeah, so recourse or correction. Yeah. Jeff's not concerned. Normal January correction. Yeah, probably so, Hank. But it's also just a normal correction for Bitcoin. Let me show. I'm going to play a video for you guys. And let me get over here to the video. This video was done on, it's a 2-minute video. So I'm going to play it and sit back and let you guys watch it. And
we've seen this dozens of times before in the short life that Bitcoin has had. But first, the depressing thing for all of us, and frankly, it is just that. Let's just put this in context. 100 grand since 2011, when Bitcoin basically, over the last 5 years, you know, you got a 3-bagger in Apple, 6 million, 2 in Tesla, 3.7 billion. Now, let's say you didn't risk 100. You said, I'm not going to do that, or that's a lot of money. You risked only 10,000. You'd have 370 million bucks in your pocket. How about if you risked 1,000? 3-4 million bucks. Nothing's like this. Yes, there are all the analogies to the South Sea bubble, to the tulips. There's no rate of change ever in any of the data that is like this. But let's look at the current sell-off. Here is, now this is important. If you do an arithmetic chart, the thing looks like this. You can't even analyze it. But if you do logarithmic, nonlinear, it puts the rate of change in perspective with preceding moves. So if I put the percentages on here we go. Now, what do you see? This is since inception, down 31, down 38, down 93, down 39, down 25, down 70, down 67, 73. So in that context, what makes this different? Now you could say, yeah, there was just a few people playing here, now that's big money. Fair enough. But in the context of corrections, there's nothing different per se. And if there were, then how did all these happen? I mean, this is just right in the percent. We have ones that are 93, 73, 67, 70, and this is only 33. So let's look at the here and now chart just to put this in context. This is over the past year. I mean, these are remarkably uniform. 25, 25, 31, 33. And if you were to draw a trend line, for what it's worth, today we checked back almost perfectly, and after being down a lot more, it did close well, and we sort of bounced off this top of the channel. If you're not involved and you've wished you had made billions, take advantage of this and put $1,000 in it, or a little more.
What do you guys think about that? I think that's freaking awesome. That when I saw that, I mean, I already knew that by heart, but I didn't realize it was so customary. It's like, oh wow, it's just like, every couple 2 or 3 months you're going to have a big correction like that, but the overall trend is like just going in that 45-degree arc, straight up. So yeah, John, I can send you a clip of that. Let me just see if I can. I'll see if I can find that. By the way, guys, if you can't watch the whole webinar tonight, you'll get an instant replay link, so you'll be able to go back. I don't know how long we're going to go. We'll just go until you guys get tired. I also want to give you guys something called the Wall Street cheat sheet. This is where you can start learning. Let me get the address. Let me copy the link address. Okay. Look, it's called the Wall Street cheat sheet. It's basically, it kind of gives you an idea of when markets go up and down, how people tend to react, and most traders react emotionally to the market and not logically. And that's why what Mark talked about, chasing a sell, when you jump out of one into another because it's pumping to the moon. Have you ever heard these terms, these slang terms like pump? That coin is pumping. That means it's going like straight up. Big green candles on the chart that you watch stocks, your stocks on, and watch your coins on. It's going to the moon. Oh, it's going to go to the moon. It means it's just going to go way, way up. And so people are always wanting to get on the pump and jump on a coin that's pumping and go to the moon. But generally speaking, they jump on the rocket ship that's about 3/4 of the way up, and they sell right about the time it's coming down, and they lose money. This is wow, that's a long link. Dang, I didn't know it was that long. Holy Toledo. Anyway, that link will take you to a copy of what's called the Wall Street cheat sheet. It gives you the emotional cycle of what normal amateur investors tend to go through. And you can't approach the market like a normal, average, emotional trader, or you'll get burned. You really need to find somebody that's a mentor. If you want to trade cryptocurrencies, you need to get in front of somebody that you can actually train you with a system that's rules-based and not emotional. And that's what I'm doing right now. I'm using a system called a technical analysis system that a fellow's teaching me, and he routinely gets 60 to 100% or more returns on trades that might last 2 or 3 days or a week, sometimes a couple of weeks. Recently, I had one trade where I earned 131% in 24 hours, and then I got out, and I was pretty happy with that. If I'd stayed in, it would have turned into 500 and something percent because it just kept going up. But I had my target. I thought, well, you know what? I made a pretty good amount of money in 24 hours. I'm not greedy, and I'm glad I made it. I kind of wish I'd stayed in. Then I made another trade that lasted 7 days, and I made 135%. But come on, if you had your money in the bank at 1%, if you're not getting, banks don't even pay 1%. It'd take 135 months to get the same return that I got in a week. So yeah, I want to learn how to do it. I want to learn how to do it properly. Here's some of the things you guys said, okay, John says, smiling real hard, love it. Great, okay. And you guys also talked about when I asked you, are you concerned? Robin's not concerned. Jeff's not concerned. It's a normal January correction. When you see red, I see green. That's a good point, John. By the way, John, do you want to come into the room, man? You got stuff to say. I'm going to see if I can bring you into. I'm going to invite as a presenter. You'll get a link, and if you want to come in, if you got a mic and a camera, you'll click that link. It's going to take you a few seconds to get in because it's going to test your audio visual, and you'll finally pop into the room with us if you want to come on and talk. So I sent you that. John runs a Facebook group for crypto investing. Eric says, no panic, it's on sale. Isn't it really funny that in like this the one market, like if you go down to the supermarket and they had something on 50% off, you're like, wow, that's a great deal, and you buy it. But when stocks fall 50%, everybody, oh crap, the market's crashing. Well, you got to look at it. No, it's on sale. It's like 50% off. That's the time to buy. Nolan, you want to know what the indicators? Bitcoin could easily go back under 10,000. I don't know. I'm going to bring up my the software that I use to map a trade and to look and analyze just to kind of give you an idea of what's available for folks out there. Okay. All right, let's look at BT. All right, I'm gonna get my. Okay. So I'm going to share my screen again. Give me 1 second, guys. This is these are the kind of tools that traders use to analyze a particular coin and determine if they want to make a trade. Mark, tell me when you can see my screen.
Yeah, I can see your screen. Everything's good.
Okay, so this is called candlesticks. Okay, and I don't know why I'm not logged in. I may have logged into the wrong account. Let me try one more thing. It logged me in automatically. I didn't want it to do that. Let's see. Okay, I'm going to sign out, guys, because it signed me in under a test account. Let me take a look at this other one. That's my account. Okay, let's go. All right, so this is a software you can use. You can sign up for it and use it free, but you have limitations on what you can do with it. You can't use certain indicators, and you can only limit it to what you can do. But we're going to take a look at. Okay, so let's take a look at Bitcoin, BTC US. Okay, so that looks pretty daggone busy. Let's get rid of some of this stuff here. Get rid of this Fibonacci. Take away some of this noise. All right. So I've been tracking Bitcoin, and if you look at that Wall Street cheat sheet, let's do this and let's do this, and let's stretch that out. Let's change this to 1 day. I'll explain this once I get my all right, so look at that right there. If any of you guys have already clicked, I don't know if you've already clicked on that link I gave you for the Wall Street cheat sheet, you're going to notice that it looks similar to that right there. Is that, your Bitcoin's like riding down here. It's not really doing anything. And then there's a little bit of bump right here, a little bit of impulse up. And that's the first stage of the emotional chart where it, gets a little exciting. And that kind of gives you an idea that somebody's interested. And then it goes and starts making a move. Well, there's tools that we can use to determine whether this thing is what it's going to do, and that's something called the Elliott wave. I'm not going to get into any of how this stuff works, but bottom line is you can use different indicator tools. You can draw trend lines and see which direction the market's moving. So those are things you can do. So if you're going to learn how to get into a trade, was it Cal? I can't remember who that was that asked me that. You would want to use something like this and start learning how to use some of these indicators. And that's not a short period of time. It takes a long time. I've been traded options a while back, several years ago, and I was exposed to things like the Fibonacci tool that can kind of give you an idea of how high a stock or an option or a crypto might go based on these Fibonacci ratios. But it takes some time to learn it. And I've got a guy that's teaching me from the ground up. I didn't pay him a lot of money. I paid him $140, and he taught me one-on-one how to use these different indicators, which I was already kind of familiar with, but at least, so when you start looking at that, there are indicators that can tell you kind of what's going on. There, like for example, this particular, it's called an Ichimoku cloud formation, and it's basically just a moving average that's colored in between the slow and the fast moving average. But when it says it's green, then that means it should be an indication that it's going to go up from here. If it was red, I would be, that's on a 1 day chart. We're looking at 24-hour period. So each one of these little candles, they're called candles, green and red. Green means it's going up, red means it's going down. Then for each candle we're looking at, that's a 24-hour period. And this indicator right here would tell me that, hey, it looks like it's going to go up from here because it's turned green. Now, that's not just because it's that indicator says that doesn't mean I'm going to make my judgment call on that. I'm going to look at several different indicators in confluence and get an idea. And I'm going to look at different time frames. Instead of 1 day, I'm going to look at the 6-hour time frame. Oh, wait a minute, look at the 6-hour time frame. We've got red candles. A red cloud. So until this thing breaks through that red cloud on the shorter time frame, I'm probably not going to look at buying into it. So there are ways that you can do this through what's called technical analysis and charting that I don't know why it works. Why does Fibonacci work? I don't know. Fibonacci invented that thing back in the 1700s. He's a mathematician, and it appears in nature all the time. So anyway, I'm going to go back to unsharing my screen there. But, okay, so that is the kind of stuff that you can learn if you can find somebody to teach it to you. China has 200 million stock market participants, and crypto traders now should be less than. What do you mean by that, Mark?
Well, it's hard to tell. We know that the 200 million stock market participants because of the market data. And after September the 4th, all I can say is after September the 4th, if you count how many of those chat groups are out there, crypto groups, and you look at the number of participants in there, and the less than 1 million is my estimate.
Does that count the fact that some people are in multiple groups?
Yeah, in other words, there seems to be a consensus that there should be about 1 million to 200 million. In other words, people in this crypto market is less than 1% of those in the stock market.
So what you're saying is there's a lot of people coming. They're going to be coming uh, to this market
Well,
that
it's hard for Chinese people to do it now. It's really difficult. You have to use a VPN software because you cannot access Binance. Normally, you have to use software, so it's not as easy now.
let me give you some stats. The guy I'm on an exchange called Binance.
Uh-huh.
Binance is run by a fellow he's from China originally, I guess. China started cracking down on cryptocurrency and exchanges, so he just moved his exchange to Japan. And he was interviewed the other day, and he said that when all this started blowing up, all of these exchanges basically shut down for new applications. I tried to open an account on Bittrex, another exchange, and they said, sorry, their website said, sorry, we're not taking any new applications. There's too many. We're processing too many, and we don't have enough, support to go around. Um, Binance did the same thing. I got an account open with Binance, started trading there, but they shut theirs down. And then they shut it down for about 3 weeks, and they opened it up. And that one day, they got something like 300,000 applications and shut it right back down. And he said they're getting on average of 4,000 applications every single day to open up an account at Binance. So think about all the different exchanges. The same thing's happening with Coinbase. The same thing happening with Genesis. All these exchanges have hundreds of thousands of people pouring in, just trying to give them their money and get into this space. And then on top of that, it's taken weeks a lot of times to get your account open and then funded. So there's a lot of new money coming. It just hadn't even been set up yet and hadn't even put in there. Cal says, how do you find your TA? How do you find your TA technical analysis mentor? Have a core portfolio for buy and hold, but want to learn to make better swing trades right now. I'm going to gut by my gut and what is mentioned by others. I kind of got lucky. I was in a Facebook group for crypto traders, and I was just reading some of the posts, and some guy in there had made a couple of really good points, and he actually posted one of his recent trades, and then he posted a link. He posted an idea. Like, I'm going to be doing a free webinar tonight to talk about the Wall Street cheat sheet and how emotional trading is done and how the cycle of a full trade comes around. And so I went to his free webinar. He mentioned Fibonacci, showed a little bit about that, and I immediately knew this guy kind of knows his stuff. And so I started following him. He has a Telegram channel, and I started following him on Telegram. I'm here to pitch him, by the way, because really right now he's in the middle of a big change. His Telegram channel blew up so big that there was just so many people in it he couldn't keep up with it. He started out doing some one-on-one lessons and some small group lessons, but later he said, Jake, I really messed up. I shouldn't have done any of that. When I'm sitting there charging somebody $75 to take a group class, and I've got 10 people in there, that sounds like a lot of money, but I spend 2 hours or so and make $750. I could have made $15,000 in the market by properly researching and setting up my next trade. So he took, I think he started with $15,000 a year ago, and he's turned it into $250,000 in his trading. So, yeah, James is saying he's going to get his stuff together and maybe come on next week. So anyway, yeah, so I kind of got lucky. I mean, there's other people out there, but you do have to have enough knowledge to know, am I finding somebody that's smarter than me that's actually going to be that's going to. But here's what I'm agreeing with Sage. Sorry, Sage. I'm agreeing with what he's saying. In 2018, let me see if I can. He says, man, 2018 is going to be life changing, and I believe it. It's going to be a big year for crypto. You need to study your tail off and learn this stuff. And I'm going to find that. Give me a sec here, see if I can find that. Let's see. Bookmarks. Okay. Bookmarks. I'm looking for that article that I found that's like a great primer. Yeah, I'm not seeing it. I'm gonna have to do some searching on that, guys, to find it. I can't take the time to find it right now, but I will get it for you guys.
Jake,
And
which one are you referring to?
I was reading a blog last night, and it was a blog post, and then in the post, the lady said, "You got to go check out this guy. He's got a big long list of all the stuff." And I can't remember, it was hack member, hack something, and he just had a big long article, and he listed out every different resource that he could think that would help a brand new person go from there to being like an expert in about 30 or 40 hours of study. And he actually broke it down on on how much time it would take to consume this information, and it was really well done. I thought I saved it as a favorite. I bookmarked the page. I can't find it in my bookmarks. I'm sure it's in there. Let me see if I can find it in my history. So what did you say, Saj? I got two screens going here. I'm trying to keep up with y'all's. John, what happened to James? He had to bail, man. His audio was messed up. It was lagging really behind. Okay, let's see. Vitality says, "What is a green dildo?" I'll try to keep it clean, but the fella that teaches me, for some reason, when he sees a big green candle, which means the price went straight up, he just calls it a big green dildo. I don't know why. So anyway, I guess because the market is very erect at that moment in time. I don't know. Let me see. People are selling Binance accounts for profit. That's right, Nolan. There are some people that the market, it's so hard to get an account. People are selling verified accounts. I don't know why they'd give up their account, or maybe they got more than one at the top. Saj says, I wouldn't be surprised if we do 50x. That's probably possible. Trying to catch up on your find it, Nolan. Yeah, I'm gonna find it, but I will. Go get excited and came softwares. I can't even understand what you're saying, Saj. You're so excited, man. You got that British slang. Okay. Anyway, John, you have several Binance accounts. What's the deal, man? Are you money laundering? Okay, let's see. Did you come into the room, John? I didn't see you in there. If you did, I thought I sent you an invite. It shows that you are a speaker now. You didn't do what you're supposed to do, I don't think. Because it's, anyway. Okay, guys, what other questions do you have about Bitcoin in general? I mean, I'm trying to think of things that you might want to know, and but there's so much you can go into on Bitcoin and cryptocurrencies in general before you get to the point where you're going to buy and sell and try to trade. I think you're probably as well off studying the coins and find coins that you could get behind because their project is going to be world changing. Bitcoin, the top 5 in Coinbase: Bitcoin Cash. Bitcoin Cash is a split off of Bitcoin. I don't want to go into forks because that might be over people's heads. But remember, I said that anybody can make a blockchain. Well, some people take an existing blockchain and split it off and copy it, clone it, and make their own blockchain. Litecoin is kind of that way. It's kind of the little brother of Bitcoin. And it's kind of like if Bitcoin is gold and Litecoin is silver, and so that there's those coins that you'll find in Coinbase. You probably can't go wrong if you buy some and just sit on them. HODL. Who's heard of the term HODL? That's what you want to do. You want to HODL. There was a guy that he was in a Bitcoin forum, and he was drunk, and he was upset, and he said, "I'm sitting here, my wife is out at a lesbian bar, my Bitcoin is tanking, I'm upside down, I'm losing money, but I'm not going to sell because those dadgum traders rip you off, and the only way they can rip you off is you sell. So I'm holding, and his subject line was I'm hodling, or I'm going to hodl, HODL, and it just became a meme. Now everybody says hodl or hodler. I'm hodling. They don't say hold. So anyway, Chris, what was you saying, Chris? You asked future trading impact long term. Future trading impact. What do you mean by that, Chris? Can you maybe give us a little bit more? What are you asking, Chris? Future trading. Are you talking about futures trading, like using a futures contract? How is that going to impact us long term? I probably agree with Mark. I don't know. It's going to be if it could be used to manipulate the market, but it would have been more manipulative if the futures contracts actually settled in Bitcoin. So right now you can buy a futures contract, you have to buy it with dollars. And so you can trade, you can watch the futures contract fluctuates with the Bitcoin market, but you're buying it with dollars. And at the end of the day, when you get ready to cash out, you cash out in dollars. A real futures contract would have bought Bitcoin and held it in reserve. So if you're trading a futures contract on Bitcoin, at the end of the day, somebody's going to buy some Bitcoin, somebody's going to sell some. It would have an impact on the real market. So I don't know. I may disagree with you a little bit on that, Mark, that, yeah, it might be some manipulation, but how do you see it actually manipulating the price of Bitcoin? Hello? Are you there? Did you check out on me, man? Mark, are you there, brother?
Yeah, I am. Sorry. Yeah.
All right. So my question to you is, how do you think that if a futures contract settles in dollars, that's all right, man, we're cool. If a futures contract settles in dollars, how is that really going to impact the Bitcoin marketplace? How can they manipulate it?
Well, if you think about this, me and my friend Mike was on the phone today. We chat about it for like 30 minutes. What literally can happen is it could be a big group of, let's say, a hedge fund or something. They can jack the price up of a Bitcoin, and then they can take the profit of it and immediately short the market, and then they can do that.
Wait a minute, back up. Say that one more time.
So it can be a vehicle of manipulation where when you jack up the price. And
how do you jack up the price, man? I'd like to jack up the price. How do you jack up the price?
Well, I guess you throw a big enough rock into the river, and the ripple is you're gonna cause the stir, and that's just like small caps coins. A few players can cause pump and dump. It's the same type of thing. With bigger hands, you can jack up the price.
Well, wouldn't they actually have to be buying Bitcoin to do that?
You have to buy the Bitcoins. You have to buy.
So what you're saying is, if enough of these Wall Street guys that have real money come into the market and actually buy some Bitcoin, and then they go to the futures market and sell a futures contract betting that the price is going to go down, and they've bought Bitcoin, and enough of them buy Bitcoin and the market moves up, they're going to make a profit when it moves up. Then they cash out, and then the market falls, and then in the meantime, while we're over here,
then they pay for the short, and they pay for the short future contracts.
Yeah, they get paid on the future.
That's what he was suggesting that was happening. That's what he was suggesting was happening, because I haven't checked the market. I think the expiration date is close.
It's like the 27th or something.
Mm-hmm.
Yeah, I just don't think that's what happened, man. I think it could have been natural. I don't think they got in together in a smoke-filled room and said, "Hey, let's buy up some real Bitcoin and let's sell these futures contracts." Here's another theory. January, there's about 200. Well, maybe not that many. Maybe 150 hedge funds that now buy Bitcoin, that are designed to buy Bitcoin, like millions of dollars are going into Bitcoin through these hedge fund managers. So there's a lot of institutional money starting to come into it. And normally what they do at the end of the year, like in December, they typically cash out of their positions and book their profit so they can show a profit at the end of the year. And then once January 1st goes by, they will come back into the market at some point. and it may not be right now. I mean, it's January the 18th. It's probably about time for them to do that. There's also this theory that, that once that money comes out and it falls, that all the Wall Streeters get their bonuses in January. So they may come back to the table and want to get some of this Bitcoin action with these bonuses that they're getting. So there's lots of different things that can happen. If they ever get to the point where they actually settle in Bitcoin, I think they have a lot more power to move the market. So 3 things to look at, Eric says, before buying. 1, does crypto assets solve a problem? That's a very good question to ask. Is there a utility? 2, what is crypto assets supply schedule? In other words, how much are they going to supply in the marketplace? And where's my mouse at? I'm going to go ahead and whoop. Dadgummit. I hope I didn't just ban you, Eric. Okay. I almost banned you, dude. I was trying to broadcast your message here. Anyway, so yeah, what's the supply chain? 3, what technicals favorable? These would help purchase a potential profitable coin. Are the technicals favorable? Well, so here's the thing about technicals. They change daily and monthly and hourly and annually. So basically you don't really, I don't think that's not as big of I don't know if that third question needs to even be in there, because I think you have to look at every single coin every time you decide to buy it, whether it's crap or not. You would look at the technicals and are they favorable? It just depends on what your trading style is. And if you follow the kind of thing that I do, there's a specific rules that I look at that tell me, is this even in the cycle, in that Wall Street cheat sheet? Is it in that investment cycle at a time that it's time to start taking a closer look? And if it's at the top of an all-time high, no, it's not time to look at that. I'm going to move on. It's not time to look. I'm going to wait till it has to come back down and settle down, flatten out, and then when it starts to move back up. There's one thing I didn't show you guys. I wished I should have shown you, is you show that on the CNBC video showed it, that when you zoom in, that there's those big rises and falls every so often. They're all part of a bigger rise, a wave within a wave. And so that happens all the time. You're always going to have an opportunity to do that. But those first 2 questions are totally what I would say would split one off from another. Okay. Let's see. Nolan, BT. Okay, yeah, it was BCC. Okay, how does Bitcoin affect other alts? It does affect it. It's kind of like if the dollar gets stronger, then another currency gets weaker. And same thing with cryptos. It definitely, there is a patterns. I don't know that I can even see those relationships. I haven't been around long enough to say, oh, every time Bitcoin goes up, Litecoin goes up, or it goes down. And sometimes I'm sure they diverge and miss that. People always have to be in a smoke-filled room. That's right, Chris. Man, I wish I had a big old I wish I had a big old cigar right now. Okay, John, I don't know what that is. What is that, John? He's giving us is that an image of some sort? By the way, guys, if we did this once a week, this kind of webinar, and then I started bringing in like experts, like actually I have a guy he calls himself a crypto savage. He's an author. He's a big time, okay, now then we'll cover that. He's a big time, he's a self-ownership kind of person. He's somebody that's probably like an anarchist, a voluntarist, somebody that most of these crypto guys that started early on, they don't like governments and banks and all that. They want to sidestep them. And it's kind of funny right now, all these different governments all around the world trying to figure out how to regulate crypto. They can't regulate Bitcoin. They can regulate you. They can regulate an exchange, and that can have an impact on how things work. So Nolan, you said that would be awesome. Okay. So when I do my next webinar, I don't know who will be on it, and I may have I'm sure I'll have Mark and maybe James back on if they want to come back on. But we will eventually get deeper and deeper into this pool. We're kind of sticking our toe in it, and as we go forward, we'll probably cover more in depth with more in depth subjects and things of that nature. So, okay, let's see. Somebody asked taxes and crypto. Man, is that a can of worms? And that same thing happened in Amazon. There was a big problem with trying to figure out what taxes you owe because you had your products are being shipped from all over the United States, and so every place that Amazon had a warehouse, you had a different tax rate, and you had to figure all that stuff out. But here's the deal: back when there was a time when crypto wasn't taxed at all because they didn't know what to do with it. They didn't know anything about it. The IRS didn't even understand what it was. They finally came out and decided. A lot of people wanted it to be classified as a currency because if it's a currency, then you could trade it. There wouldn't be any taxes on it. It'd be like trading a dollar against the yen. However, they came out and they classified it as an asset like gold or silver. So, oh yeah, okay, you can buy and sell the stuff you want to, but if you sell it, you're going to have a capital gain or a loss. You have a capital gain, you're going to owe us some tax money. And at the time when they set it up, it was just Bitcoin. It was like, okay, if you buy Bitcoin and then you turn around and buy Ethereum or you use Bitcoin to buy another crypto, then you could do that all day long. And then as long as you haven't gone back into dollar, you didn't have to pay taxes. Well, this new tax plan that Congress just passed, just like 3 weeks ago or a week, whatever, and it's everybody's going to get bonuses now and higher wages and lower taxes. All that's great, but in that tax bill, they included that no matter what crypto you have, no matter where you're going from, if you're going from dollar to Bitcoin and back, or Bitcoin to Ethereum and to Dogecoin and back to the dollar, whatever you're going to do, it doesn't matter. Every time you buy or sell, there is a taxable event created. And that is going to be a hard row to hoe because I don't even know how I can track it. I mean, like, here's what I did this evening. I've got, no, you don't have to turn your camera off, man. This evening, I wanted to get into a trade. IOTA was a coin that I had bought a bunch of it. It was the first trade I ever made, and I didn't have a mentor, and I did exactly the wrong thing. I bought it near the, a high. I paid like 98,000 Satoshis, and I don't want to get into a Satoshi is like the smallest division of a Bitcoin. And now it's selling for about 20,000. So, you can do the math. I didn't really come out on that. But my mentor posted a trade and said, hey, IOTA's time to buy. It's about to start making a move. And we looked at the map and everything checked out. And so I thought, okay, I'm going to buy some IOTA, but I had bought IOTA with Binance tokens. Binance is an exchange, right? So I moved some crypto. I moved some Bitcoin Cash from my wallet into Binance, and I took my Bitcoin Cash and bought some BNB, some Binance tokens, because Binance said, hey, if you buy our tokens that we have, we'll give you 50% off of your trading fees. I'm like, okay, that's kind of cool. So I did that, and I turned around and took my BNB and bought some IOTA with it. So now I'm ready to buy some more, and I don't have any more BNB. I've used Bitcoin, and I've been trading Bitcoin. I probably don't want to do BNB long term. So I had to sell I had a trade that was profitable that I had bought. I think it was NEBL. It's an exchange that is also a coin. I was profitable on it. I bought it with Bitcoin, so I sold it. I took my Bitcoin, turned around and bought some BNB, and then I turned my BNB and turned around and bought some more IOTA at a very low price, like down around 20,000 Satoshis. And so all of those transactions, just to get in that position, every one of them technically created a taxable event. But how am I going to figure out, okay, I got to figure out every move I made, did I make a profit or not? How long did I hold it? It's a nightmare. It's going to be very difficult for the average trader to actually be able to track these things. I have a feeling the IRS will go after bigger fish that's got lots of money. In fact, they went to Coinbase and said, hey, give us all of your accounts. We want to look at all the accounts and look at all the information. I said, take a hike, dude. We're not doing that. And they went to court, and Coinbase won. And then IRS came back and said, hey, we noticed something, that there was some guy that filed his taxes with us, and he claimed that he bought Bitcoin and he used Bitcoin as a technology, and he deducted it on his taxes as an expense. You can't do that. That's blatant right there. So the IRS found 2 people that had done that, and they thought, well, everybody must be doing it. They went back to Bitcoin and said, we need to see your accounts, and they said no. So they went to a judge and said, well, what we want to see is we only want to see the ones that had at least $20,000 worth of Bitcoin in their Coinbase account. That's all we want to see. And the judge relented and said yes. And there was like 14,000 customers that Coinbase had to turn over their information to the IRS. So the nose of the nose of the camel is underneath the tent, and it's going to get worse from here. So, by the way, I'm going to explain what Satoshis are. So for Robin, that you're brand new, somebody says, what happens if Bitcoin goes up to 25,000 or 50,000? There are experts calling for Bitcoin to go to 25 to 50,000 by 2018. Some people are calling for $100,000 Bitcoin. And there's a few out there that say, hey, within 5 to 10 years, Bitcoin is going to be worth $1 million per coin. Well, then how can anybody afford to buy a Bitcoin if they're up that expensive? It's because you can devise a Bitcoin down to 8 decimal places. So you can buy 0.00000001 Bitcoin. And they call that a Satoshi. That's kind of like a cent of if you're talking about the dollar. That's a Satoshi. So if Bitcoin ever did become like $1 million per Bitcoin, I'd be happy, number one. But a Bitcoin, one Satoshi would be worth about 10 cents. So you could still buy, right now you can buy, you don't have to buy a whole Bitcoin. You can buy half a Bitcoin, quarter Bitcoin, 0.0065 Bitcoin, whatever you can afford. So that way they can't print more Bitcoins, they can't inflate it, but they can at least make it divisible so that the more people that want to use it, it can still hold its value, and you can still be able to make change for it, if you will. All right, so it's madness. No one will figure out. You're right, John. Okay, some big folks going to be crucified. You're right. There's some big guys that are going to be. I kind of feel sorry for some of those guys that made like millions, and they're going to have to pay taxes on it, man. But there are some of those guys, they live in Mexico, and they don't pay taxes, and they hate the government. And they take their coin and they shift it. There's ways to Bitcoin is not necessarily 100% anonymous. You've heard that, oh, it's anonymous. It's not. They can track it. They can track my Coinbase account. They know that I bought 2 Bitcoins back about 3 years ago. They can see that it left Bitcoin's address, and they can see an address that it went to, but they don't necessarily know what I did with it after that, because there's something called Shapeshift, there's coin mixers, there's lots of ways to send your tokens on your Bitcoin through the system and mix it up with other transactions, so it comes back out on the other end with 100 different transactions, and then everybody gets theirs put back together again, and you can't trace that. So if you really truly wanted to get away with it, you probably could, but on the back end, you got to figure out how to spend it, because if all you did was make millions of dollars in Bitcoin, and you couldn't buy a boat with it, or a Lambo, everybody wants to buy a Lamborghini, I guess it's required car to own if you're a successful Bitcoin trader. But anyway, so that's what a Satoshi is. So in the trade, if you're trading coins, if I use Bitcoin and turn around and buy IOTA might be priced at 0.21523 Bitcoins. So it'd be like, you get rid of the decimal place and get rid of the zeros and just call it 21,650. Okay, IOTA's traded at 21,650, and we think it's going to go to 98,000. And based on the technical analysis and our map and our game plan, we buy it and we watch it go up from there. So Satoshi, or a SAT, S-A-T for short, is another slang term used to identify that, okay, how many sats did it move? Little things like that makes it a lot easier when you figure it out. So what did you say? Berkshire Hathaway price appreciated close to 60,000 per share, about 300,000 a share. Woo! Bitcoin to 100,000 is absolutely possible. Yeah. See what Mark's saying? Berkshire Hathaway, they've never split their stock. If you don't split the stock, it keeps going up in price. And you want to buy one share of stock with Berkshire, you got to have $300,000. There's very few people that can own that. Well, most companies, what they do is they split the stock and say you get 2 for 1, and so now the price of the stock is $50,000, but you get 2 shares, so you get the same amount of value. They just they tend to split the stock so that the average guy can afford to buy shares. It's kind of like why some people are going after these crap coins, or excuse my French, shit coins is what most people call them. These altcoins, alternative coins, or altcoins for short, meaning it's an alternative from Bitcoin. So these altcoins are crappy, and they trade, their value is like, they're not even 1 cent. They mean like half a cent or 0.003 cents. And people figure, well, if I buy it when it's like super dirt cheap, all it's got to do is go to a penny and I'm become a thousandaire. And if it goes to 10 cents, I become, a 100,000aire. And if it goes to if it goes to $1, oh my gosh, I'll make $1 million on it. It's possible, but probably not likely. You got to figure that to find a coin that early on that's that cheap, that has utility, is tough, but it's possible. Okay, any other question, guys? Because I'm probably going to about wrap it up here. We've gone almost 2 hours, and that's generally about my limit. Anybody got any other questions or comments? And John, I can't figure out why you didn't come into the room, man. I see your name and address up here. I tried to get you in, brother. I'm going to kick you back out and see if I can invite you back as a presenter. You're supposed to click a link and then you would show up in the room here with us. Mark, you got any more comments of wisdom that we can talk about? Robin, you are welcome.
On the taxes, because
Yes,
I do this thing for a living. Not necessarily is going to be say a guy with a large account size. A lot of the times, unfortunately, my prediction is some of the ordinary people could be a smaller account size that may fall victim, because every time there's stuff like this, which is hard to enforce, a lot of people is going to be randomly selected, and they're going to be examined to the teeth. They are going to.
So you think they'll make them an example so that the average guy will think, well, crap, they're going after average guys.
Well, that's what they always have done. So the 20,000 people that Coinbase disclosed to them is going to be enough for them to work on. But I got a feeling that many average guys going to fall for it because, this is the way the government works. When they get you selected, it's not going to be fun.
Right. So are you doing taxes for people who actually trade crypto or not?
I am not going to actively seeking those. The reason behind it is that it's just like you said, it's very difficult. And a lot of times you have to make a very delicate decisions. Like to be honest with you, there's a close friend of mine. He made a lot of money with crypto. Not speaking of cashing out US dollars, he invested a lot back in there. But there's a couple transactions he made on Q coins are quite substantial. Now, personally, I'm probably going to just say, because it's my friend, on the tax return, I'm probably just going to do the US dollar method. And, we're not going to put out Bitcoin until the Bitcoin is cashed. The reason why it's delicate, because what if you get checked and the customer can come back and bite you? So I am like, unless it's a friend or people that I know, I am just going to be careful. with me.
Plus, there's a liability on your part. If you get it wrong and the guy gets in trouble, you're going to have to eat it, or they're going to have to eat it, right?
No, not for stuff like this, because there's no technically a 1099s or anything for that kind of transaction. So we rely on them to tell us this. So I wouldn't say they're going to go that far, but I mean, the most liability they can assess you is what's called if you're not what's the word they use? And if you're reckless, I think it's $5,000 for being reckless.
What would be an example of reckless?
Reckless means, say you have a person to come into you and they drive a nicer vehicle. Say, for example, they have a nicer vehicle, and let's say they have a horse, and then they come to you saying they want to claim the earned income credit or something like this. And if you have a vehicle and you still do this, it's considered reckless. Also, another example.
Or you show up with a new mansion and you don't really show income that would support buying a mansion.
And then there's another case that just came up where there's an ordinary family who makes about $100,000 annual income, and they're deducting like a goodwills or non-cash contributions over $150,000. That's kind of reckless.
Okay, gotcha.
Yeah, something like that. It's definitely not considered reckless, because how am I going to know? How are you going to even know? So it's going to be tough, but I just think that somebody's going to be severely.
Somebody's going to get spanked. All right, guys, for you that stayed, you stuck the course. There's 17 of you that we had. We had a total of 33 at first. Guess what? I found the link to the how to become an expert about everything with Bitcoins, getting started with Bitcoin, blockchains, and crypto assets. And so this guy said he already had friends and family always asking him. So he says, if you have less than an hour, go watch this YouTube video and read this post. The next 3 hours, do this, the beginner's guide on CoinDesk. There are 43 different topics, but they're short, 5 minutes each. Okay, watch the banking on Bitcoin on Netflix, probably some kind of documentary. The next 10 hours, podcast, Hash Power by this guy. Listen to Tim Ferriss podcast. Subscribe to Unchained. In fact, I'm listening to this lady right now. And I can give you a few podcasts that I listen to. And maybe that's what I'll do the next one, is I'll come up with some of my resources. Here's all these different podcasts that you can listen to for the next 10 hours. Read Satoshi Nakamoto's white paper. It's right here. It's like 8 pages long or something like that, or 17 pages long. Introduction to forks. What is a fork? And you're going to like forks. In fact, I'll tell you a kind of a fun thing about a fork. When a coin forks off of the original coin and it uses most of the same protocol, they'll change the name of it. Like Bitcoin Cash is a fork off of Bitcoin. So it's very similar to Bitcoin, but it's still different, and it goes off and it's different. Once it forks, you got 2 chains, and that chain operates on its own. But what they tend to do is if once it splits, they will match your number of Bitcoins coin for coin. I had 2 Bitcoins in Bitcoin, and Bitcoin Cash said, okay, you got 2 Bitcoin Cash. And all of a sudden that Bitcoin Cash was worth like something like $2,500 a piece. So I was like, okay, handed me $5,000 for free. Okay, my mentor, the guy that's teaching me, he's about to open up a platform, a membership site, and it's not going to be cheap. It's going to cost like 0.1 Bitcoin. So right now it costs about $1,000. In fact, right now would be a time to get into it, because Bitcoin's at 10,000, so it'd be like $1,000 to join his for lifetime membership, where he teaches exactly how to trade. Anyway, long story short, he was doing a one-on-one class with him, and I said, by the way, we started talking about Bitcoin Cash. I said, did you ever claim your Bitcoin Cash? He goes, no, I didn't. I had it in a wallet and at the time, and I moved my money out of it since then, so I lost it. I said, no, you didn't lose it. He goes, nah, I probably did. Oh, no, you didn't. You can get it. I said, you got to check into it. The next week at my next lesson, I said, hey, did you ever check in your Bitcoin Cash? He goes, no, because I probably can't get it. I said, hold on. And I got on the computer and Googled it, how to get Bitcoin Cash out of a bread. He had a bread wallet is what the name of the wallet was. And sure enough, they had a tutorial. Here's exactly how to get your Bitcoin Cash out of bread wallet. I said, how many did you have? He goes, I don't know. It's about 6 or 7. I said, dude, I think I just made you about $14,000, $15,000. In fact, if you claim it, you should grandfather me into your course. He said, Jake, if I can claim it, you got lifetime membership. 24 hours later, he sent me a message in Telegram. He says, Jake, you have lifetime membership. I said, how much did you wind up with it? He said it was like 6 Bitcoins, and Bitcoin Cash, and they were worth a total of about $15,000 that I made him just for helping him out. So anyway, moving on in this article, let's see. Anyway, there's more stuff that you can do. Like he's got websites to learn more about different coins. For a deeper dive, Andreas Antonopoulos. This guy's like a Bitcoin advocate. There's 12 hours of some course that he has right there. I think it's free. There's some free courses from Princeton broken down into 60 sessions on YouTube. So you can read these two books, Crypto Assets. That's a great book. And The Internet of Money. I haven't seen that one yet. So you got all of this stuff, right? So that's, and I'm going to put the link in here for you guys to get that article and follow those resources. There's the book, Crypto Assets. It's encrypted. It's printed backwards, so you can't read it. No, it's just a screenshot, I guess. Are you guys seeing it the way I'm seeing it? It's backwards to me. Maybe it's not to you. If maybe next week I've got a link that if you have never been given a book in audible.com, the book reading online books or Audible books, you can open an account. It won't cost you anything. You don't even have to give them your credit card. I could send you a link that will gift you the book, and you can listen to the Audible version for free. So it's your first book that you ever get gifted to you or loaned to you. I mean, you can give somebody a book. The first one is free. So if you guys want to come back next week, remind me. I need to get the link for that, but I can maybe get you guys the link to that Audible book. That book, really, those guys do a professional how to analyze crypto assets. I think that was the thing you were looking for, Cal. So any other questions, guys? All right, well, let's wrap this up here. I hope you guys had a good time. I hope you enjoyed it. Mark, I really appreciate you coming on board, man. You bailed us out because James, man, what a I don't want to call him a loser, but he could be like a loser in 3D, man. Like, but he he's made a lot of money, hasn't he? He needs to take some of that money and buy a dadgum good computer with a good internet connection and good audio and good camera. Well, I got a good everything. That was your speaker that I couldn't get to work. I'm over at my buddy's house. I'm giving him a hard time. I'm not even at my own house. I'm at my buddy's house because at my house I have to tether my laptop to my phone and use my data because I don't have good internet there. It sucks. Okay. Hey Hank, I like that. Where do you get the name Hank? I want to call you Hank, but I don't. Well, I see that's Hank. All right. Be looking for a email from me when we do the next one. I've got Vin Armani. I told you about him, a crypto savage. He's actually a gigolo, and I'm dead serious. He was on the show Gigolos on Showtime, like for 6 seasons. It was supposedly he's a star on that show. I met him at a retreat, not like a retreat, more like a workshop for people who do like homesteading and prepping and self-reliance and crypto savages, etc. He was one of the speakers. And so anyway, oh, you're Dutch. Okay, cool. So anyway, he's a real life gigolo. And I mean, it was kind of interesting asking questions about it. In fact, while he was there, this is funny, while he was there, he stayed the weekend at this guy's house. We were like camping out in the backyard, right? There's like 50 of us at this group, at this workshop. He's from Las Vegas, so this is like right outside of Dallas, Fort Worth area where we're at. He's like, well, I can't stay tonight. I got to go. I got a date. He had set up a date with one of his customers so he could pay for his trip while she was in like, oh, she didn't have to go to Vegas to see him. He was there locally and did a house call, I guess. So anyway, I didn't get more details than that, but anyway, it must pay really well. All right. Hey, guys, Chris, I appreciate all you guys being on. Spread the word, please. If you're in Facebook groups, and if you happen to be in the same Facebook group, I mean, I don't know how I found you guys. I don't know. In fact, once you do that, how did I find you? Where did you see the link to join this webinar? Did you see it in a Facebook group? If so, which one was it? Are you on my Amazon private label list that used to be selling private label stuff? Still kind of tinker with it, but I had a big email list from that. But where did you guys come from? How did we connect? And then that'll be the last thing, and we'll get off of here. Come on, give me some love. Give me some feedback. You sent me an email. Yeah, but Robin, how did I send you an email? Were you ever in did you ever see me in the Amazon private label world? Okay, you're in the crypto group. Okay, Chris, so you know what I'm talking about. Okay, and the Nashville Bitcoin lunch. Okay, cool, Jeff. All right. Amazon list. Okay, cool. All right. Crypto chat room. All right. Groovy. Amazon. Okay, cool. Gasmic. Okay, I know what you're talking about. The Bitcoin and beer meetup. Just like 2 nights ago. Okay, cool. Amazon private label list. All right. There's a lot of people. In fact, James, Cliff and you guys from Amazon, did you guys see my interview with James Fend? James Amazio was what he went by when he was at Amazon. Now we're going to call him James Lambo. But yeah, he was a successful seller. Saj that was in here earlier, Colin, he's from the UK, and it was like in the middle of the night for him over there. I interviewed him. They both got into crypto. I didn't even know it. I just, the last time I talked to him, oh yeah, I'm doing crypto. I'm investing in Bitcoin. Really, I am too. So it was like a lot of these Amazon folks figured it out. No clue, really. I can't remember. I used to do Amazon. Okay, it was Amazon private label, Robin. I used to do a weekly webinar just like this, interviewing successful sellers. And you probably came to one. You probably maybe saw a YouTube one or something. So, are part of the same group that I was in. But I didn't just steal your email. I promise you that. You gave it to me willingly. So, anyway. All right, guys. Hey, Mark, thank you so much, brother. I appreciate you being on, and maybe next time we'll get a few more people on the panel or we'll have a guest. I'll talk to you guys later, and we're signing off.
Oh, thank you, Jake.
You are welcome, brother. I appreciate you. Cheers.